The mindset of the spirited investor. Energy and curiosity define the spirited investor, a breed apart from those who drift with the market's currents. Rather than settling for average returns, this approach charts its own course, seeking opportunities that outpace the ordinary. The pursuit isn't reckless, it's deliberate, fueled by a willingness to explore beyond the familiar. Across the landscape of investment strategies, certain options stand out for those eager to take the helm. Bonds for the bold. For spirited investors, bonds aren't just a safety net, they're a launchpad. Several types warrant attention. Tax-sheltered coastal development bonds. Backed by the unwavering strength of federal guarantees, these offer a secure foothold. High-return horizon bonds. Taxable but bolstered by government assurance, they promise richer yields for the risk-tolerant. Tax-free municipal bonds. Powered by rental income from major companies leasing public land, these blend tax advantages with stability. On the wilder edge, battered bonds, teetering between debt and equity, beckon like a treasure chest. They blur the line between caution and adventure, offering high stakes and higher rewards for those hunting bargains. The rhythm of stock strategies. In the realm of stocks, spirited investing follows four distinct rhythms. Riding market. Waves, buying at lows and selling at peaks, a classic ambition. Chasing rocket stocks. Targeting companies primed for explosive growth. Unearthing undervalued gems. Seeking overlooked value across the market. Unlocking golden eggs. Pursuing unique opportunities with hidden potential. Timing the market's dips and surges. Once seemed a beacon in the fog, with historical charts suggesting simplicity. Yet the past 2 decades have upended that illusion. Volatility demands instinct, not just numbers. Not every investor boasts that rare flair, so a simpler anchor holds firm. A 50-50 stock-bond split, adjustable from 25% to 75% in stocks, proved its mettle in 1972's rough seas. Flexibility suits those with a nose for shifts, but precision isn't required. Rocket stocks, high flyers poised to outpace the pack, tempt with their allure. A blazing track record and bright future make them seductive. But the catch is clear. Spotting past winners is easy. Predicting tomorrow's is treacherous. Prices often reflect their shine, leaving little room for profit, and a stumble can turn a star into a cinder. Growth has limits. The ascent eventually flattens. Data tempers the hype. Horizon Analytics, stellar funds, 120 portfolios, chasing rocket stocks from 1961 to 1970, gained 108%, edging the market beacon index's 105% and topping the Titan 30's 83%. Yet, in 1969 and 1970, most lagged both benchmarks. No windfall emerged, just market echoes. Professional fund managers, armed with superior tools, still struggle to outpace the crowd. Betting on rocket stocks at lofty valuations, 20 times earnings or more, carries odds too steep to recommend. Paths to steady rewards. The real gold lies in 3 trails, each demanding sharpness and patience. Sleeping giants. Markets often chase flashy newcomers, overlooking established names nursing temporary setbacks. These titans, familiar to all, boast resilience and expertise to rebound. Studies of the Titan 30's undervalued players, priced at the lowest earnings multiples, show consistent outperformance since 1933. From 1937 to 1969, annually picking the cheapest 6 or 10 beat the index in 25 of 34 years. A $10,000 stake in 1936, rebalanced yearly, grew to $6,900 by 1962, doubling the Titan 30's return. Hidden hoards. Stocks priced far below their true worth gleam like overlooked treasures. A company's value, whether from understated earnings or gleaming assets, might exceed its market tag by 50% or more. In 1941, Apex Motors traded at $25, despite $3 in profits and steady dividends. A gift from the market's overreaction. Fear turns molehills into craters, ripe for the astute to claim. Unsung heroes. Smaller firms, ignored by the spotlight, thrive in the shadows. Mid-tier players in unglamorous sectors often deliver quietly. Zenith Goods hit $40 in 1968, with $5 earnings, only to drop to $20 by 1970 despite record profits. Pinnacle Oil, a major player holding steady for 13 years, still priced at a humble 10 times earnings in 1972. The market's bias against the unflashy creates a bargain haven. The spirited edge. Success for the spirited investor comes not from outracing the market's sprinters but from carving a quieter path. Value lies where others overlook. Dusty corners holding steady, outsized rewards. With a keen eye and a steady hand, this approach turns curiosity into triumph, proving that boldness, tempered by discipline, paves the way to wealth.